For your components, okay, we are looking at your current account, like what I call this is CA, okay, and capital and financial account, KFA. Okay, so when the question tells you that there is a balance of payment deficit, okay, the assumption is always current account deficit. To be more specific, is the balance of trade deficit, okay, BOT. So unless otherwise stated, always look out for current account, always look out for balance of trade. Okay, capital and financial account, it can be tested, but it is unlikely a concern for deficit. Okay, it's more of the current account. Alright, so I want you guys to look out for the first part. Okay, your balance of trade. I want you all to add on this. Okay, visible and invisible trade. Okay, invisible trade below is a typo error. Okay, visible and invisible trade will form your overall balance of trade. So your balance of trade, okay, in a nutshell, is what we consider your, better known as X minus M. Okay, so we are concerned about, okay, the net receipts, okay, from your net exports. How much you sell to the rest of the world versus how much you buy from the rest of the world as a country. Okay, so if a country is selling more goods and services to the rest of the world as compared to what they buy, okay, will that be a net inflow or net outflow? Will the country be receiving more monies, okay, or less monies? So when you sell to the rest of the world, okay, there will be net export, there will be export revenue coming in. When you buy from the rest of the world, there will be import expenditure flowing out, right? So in a nutshell, we're looking at the net of the two. If we sell more to the rest of the world, we are going to have a net inflow of proceeds and monies coming in. So be concerned, okay, you have to know what is the plus and minus sign. So in this case, we can consider that our balance of trade will be in a surplus. Okay, if our net exports is in a surplus. Simple enough? So the concept of visible and invisible trade, some of the school use, is not really that important. Okay, visible trade means goods, invisible means services. Okay, in a nutshell. Okay, tangible and intangible. Okay, so your current account consists of your balance of trade. So this is your first sub account. Okay, under current account. So the second one is what we call the income balance. Okay, so we are concerned about your rent, interest, dividend, profit. Okay, that's from your overseas investments. Okay, so what do we mean by that? Okay, I just give you an example. Okay, so let's say, okay, there is a foreign firm. Okay, let's say Apple set up a subsidiary in Singapore, right? And they start to remit profits back to United States. Is this an inflow or an outflow? Okay, interest, dividends, profits, okay, and rent. So when a foreign firm is remitting profit out from Singapore to United States, to whichever country, this is a outflow, right? Okay, so the income balance will be worsened. Okay, there will be an outflow. Likewise, okay, we know that there are Singapore firms, they are located overseas, right? For instance, Bread Talk. Okay, Bread Talk has a lot of branches in other countries. Let's say Indonesia. Okay, so if Bread Talk Indonesia, okay, the company starts to remit profits back to Singapore, then this is what we call a inflow. Okay, your income balance will be improved. Alright, so this is hardly tested, okay, but it can come out in case studies, especially when they tell you income balance or they tell you any of interest, dividend, profit, and rent. Okay, you got to be concerned about the flow. Okay, and you got to be concerned about, okay, where is the firm. Alright, the last one, okay, is what we call a current transfer. Okay, so remittance fall under current transfer. In modern day context, especially what is happening right now in Ukraine and Russia, it does have a small significance. So one of the components of a current transfer, or what we call a unilateral transfer, is called a government aid. So you see that a lot of countries are providing aids to Ukraine, right? Okay, in the form of loans, in the form of financial aid, in the form of weapons, in the form of whatever. For government aid, if Ukraine is receiving foreign aid, okay, from other countries. Okay, then the current there will be an inflow, okay, in the current transfer side, okay, or unilateral transfer in terms of government aid. Okay, and the country that's providing the aid, United States, France, Europe, okay, there will be an outflow. Okay, so it's always important to look into what perspective you are taking, which country. Okay, another one that is fairly popular is what we call remittance income. Okay, remittance income are remittance income of individuals. Okay, so I'll just give you a good example of what do we mean by remittance income. We do realize that if you have a foreign helper, they will be always wiring money back, or what we call remitting income back, okay, to their home country, right? Okay, so remittance income, okay, is one of the biggest, okay, account, okay, for current account, especially for countries that export labor. Okay, so Philippines, Indonesia, Myanmar. Okay, they realize that, okay, for the current account, the current transfer, okay, there will be a lot of remittance income from their citizens back into their country. Okay, so this will be an inflow, okay, from Philippines, Myanmar, okay, all these countries that export labor. So out of these three, okay, balance of trade, super duper important.